Good morning. My name is Frank Grinnell. I've been advising professional money managers and investing in the stock market for over 20 years. It serves as my day job, but most importantly, it is my absolute passion. On Street Views, I offer my daily viewpoint on the stock market in under 7 minutes. I will cover things like the global macroeconomic picture, the mood of the market, company-specific news, secular trends with some actionable sector and stock calls. I hope my insights are useful to you, whether you are a professional money manager or a passionate investor. At Grinnell Capital, we actively manage dynamic stock and ETF models for financial professionals and their clients, as well as individual investors. If you want to learn more about what we do, send me a note, frank@grinnellcapital.com. You can also find more of my insights on Twitter @GrinnellFrank. And now, today's Street Views. Hey, good morning out there. Thursday, the 11th of August, 2022. Hope you're having a good morning. The hits keep coming. So we are green in equity futures land this morning, just after 7 o'clock Mountain Time. PPI numbers came in a bit softer than expected. That core number down 50 bips versus a 20 bip expected rise. Signs that inflation's coming down, slowly but surely, what have you. Still elevated prices on a year-over-year basis, but nevertheless, it's a friendly market number. Jobless claims came in at 260,000. That's the highest it's been in a while. That's another friendly market number. I recall the Federal Reserve does want to see increased unemployment. That is deflationary by its very definition. And no one wants anybody to be out of a job, but at the end of the day, that is positive for the macro situation. And one thing I want to comment on, a lot of technicals are starting to improve. We've had this big rally out there, and it's starting to have an impact on the charts, as you can imagine. You look under the surface, I mean, the major indices haven't recaptured the all-important 200-day moving average yet. Russell's getting kind of close. It's thinking about it. It's about 5 points away, 195.5 close versus 200 on the IWM. But when you look at something like the XME, minings and metals, the ETF from S&P, that one it pretty confidently recaptured the 200 yesterday on a gap up and decent volume and traded higher. Now, you may recall we've been talking about base metals as a place we wanted to be for the reasons of a lot of it largely decreased capacity from Europe because of elevated energy prices, the fact that no one wants to buy anything from Russia, just a lot of places people don't want to go to get their resources, and a lot of other places that are going to be constrained because of the cost of energy to manufacture. So I read an article overnight. Century Aluminum is shuttering some of their capacity, and that's a U.S. company because of elevated costs for energy. So read that positive for Alcoa. So we do own Alcoa AA. We do own the XME in our all ETF strategy. May very well take that up. Freeport, we own that, sold it. We might buy that again. We also own some Nucor. But yeah, the base metal thesis is playing out. That looks interesting. That's going to have another gap up, slight gap up this morning. But what else? So the dollar also taking a little bit of a dip here. That's important. Emerging markets a little bit bid. Good days out of Hong Kong, Taiwan, and China overnight. Gold not doing much here, at least holding the 1800 level. I'd watch that. That seems like an important level. Big break below 1800. It's just probably going down again. It might be a little bit too early for gold. It doesn't feel like it's too early based on anticipated rate hikes and what have you. I don't know. We'll see. Still long the GDXJ, still long. Also, we own some AEM, which is a miner that had just an amazing quarter. Tiger 21. You guys probably heard of these guys. They're an investment club for people that have the good problem of having over 20 million net worth that is liquid. So they have noticed that they are long stocks as the largest component of investment ever. Normally, real estate makes up the largest component of what they're invested in. It is now stocks. They mostly go by the way of ETFs. The comment from the chairman was a lot of folks bought the FANG type stocks. I guess I don't know if they bought the triple Qs or what. But the other one was solar. I thought that was interesting. I just on the thought that that's going to be the future of energy and where everything's headed. So they want to be all bulled up on the TAN, the TAN, I imagine. That's the ETF for solar stocks. So us here, we're still constructive on stocks that we own. We like to talk about it being a market of stocks versus a stock market. We do have a list of buy candidates we want to engage on. Don't want to do it here. Definitely not going to do it on the gap up here today. But we also have other names we want to add to. So we still have a lot of cash to put to work, but still not trusting all of this, thinking that maybe the inflation still has some work to do, and the Fed's got maybe more work to do than people expect. No one knows this for sure. We will see. The market is trying to look through all this, obviously, and say that we're going to have an easier Fed and this inflation thing is going to come down. That has to be the message that one would take from the positive move in risk assets. So we will see. That's all for today. Have a good one out there, and we will come back to you tomorrow.
And now for some important disclosures. Grinnell Capital is a state-registered investment advisor. Services offered by Grinnell Capital can only be offered in certain states where Grinnell Capital is registered or meets required exemptions. Registration does not imply a certain level of skill or training. For additional information about Grinnell Capital, including its services and fees, please review the firm's disclosure statement as set forth on Form ADV and available at no charge at advisorinfo.sec.gov. This podcast is provided for informational purposes only. The information contained herein should not be construed at the provision of personalized advice and is subject to change without notice. This material should not be considered as a solicitation to buy or sell any asset or engage in a particular investment strategy. Investing in securities involves the risk of loss, including loss of principal invested, and may not be suitable for all investors. Past performance is no guarantee of future results. This podcast contains certain forward-looking statements which indicate future possibilities. Actual results may differ materially from the expectations portrayed in such forward-looking statements. As such, there is no guarantee that any views and opinions expressed will come to pass. All expressions of opinion reflect the judgment of Grinnell Capital as of the date of publication and are subject to change without prior notice. This podcast contains information derived from third-party sources. Although we believe these sources to be reliable, we make no representations as to the accuracy of any information prepared by any unaffiliated third party incorporated herein and take no responsibility therefore. This podcast is provided with the understanding that Grinnell Capital is not engaging in rendering legal, accounting, or tax services, and we recommend that you seek out the services of professionals in these aforementioned areas. The principal investment focus of the accelerator model, the strategy, is to achieve strong relative and risk-adjusted returns, primarily by investing and trading in securities issued by companies that focus on the global information, technology, consumer, healthcare, industrial, and infrastructure sectors. These sectors are characterized by robust secular growth, an abundance of both new and maturing product cycles, a high degree of competition that creates the potential for relative winners and losers within a subsector or theme, a high degree of revenues and earnings volatility, rapidly changing sentiment and public perception, significant yet unrealized potential for globalization, and superior relative liquidity. Investment in the strategy is speculative and involves a high degree of risk. The second investment model is called the ignition model. The ignition model is an all-exchange-traded fund, ETF, strategy with investment objectives similar to the accelerator model. This model seeks to capitalize on long-term growth trends experienced by the market leaders in various areas and sectors. The ignition model will also seek ETF investments based on cyclical forces experienced in the U.S. and the global economy. This model is also designed to have the ability to offer some downside protection in the event of significant market stress through investments in ETFs designed to take advantage of market volatility. The strategy's performance can be volatile. Grinnell Capital has total trading authority over the strategy. The use of a single manager applying similar trading programs can mean a lack of diversification and consequently higher risk. For more important disclaimers, please visit our website, grinnellcapital.com.